What's up, guys? It's July 21st, 2025. Looks like we had a trading range day today. Had a gap up with a rally, sideways price action, and then we broke out again. So it's the full market cycle. I want to make a quick announcement for the memberships. I've reduced the price since the videos have changed. I'm doing more trade breakdowns, talking about entries and exits and where the trap traders are and what the context is. I think it's really important we start to zoom in on the context of the trade. So with that being said, the new memberships are called second leg snipers, and it's just $10 now rather than 20, and it'll be more about, I can give you a quick example. So I'm in a trade right now, just got filled. Bulls got trapped up here and they start to buy down here. I'm looking for a second leg down from here. So the bulls that buy here are trapped into a losing position. So they're going to buy more to get out at break even. So that's where I enter. I enter where the trap traders are getting out. The reason I enter where trap traders are getting out is because that creates momentum. So there's bears that short here that are looking to press their position. That's one type of trader. The second type of trader is the trap trader. The bulls that bought here, they buy here, and this is their 50% mark. They're selling out of longs. And the third type of trader is us, the second leg traders that understand this dynamic. Leg one, pull back, leg two. So that's generally how I'm going to be talking about all my trades, all my trade breakdowns, and winning or losing. And I want to talk about how the system is teaching me to trade. For example, let's say this bar ends up becoming bullish and the market's rallying right around this area, so the upper half of the fibs, then that already tells me that we're in a trading range and there's not a leg one, leg two momentum. The reason that I know that, because if bulls get up here and there's like a bull bar up here, that means bulls are making money. As long as bulls stay relatively, like for the most part, below the 50% mark, I know they're just getting out at break even. It's popping up, they're selling out, popping up, selling out, popping up, selling out. And that's how I trade. That's how I've been finding a lot of success recently. And that's what the memberships are going to be about. And it's called Second Leg Snipers because I just like that. So I will be going live from time to time. A few of you know that my work schedule has changed. So I'll be working during regular trading hours and trading during extended trading hours. With that being said, so I'll be doing the breakdowns. That doesn't change. So let's get into it. All right, first this is the weekly chart. This is the daily chart. Bulls trying to get bad follow through at highs. Well, let's go for the weekly first, actually. So last week ended in a bull bar, and today that bull bar has followed through. The problem with today's bar is that it has a big tail on it. So although bulls were willing to buy the pullback, they weren't willing to hold at highs. Weekly chart, daily chart. For the daily chart, we've had several legs higher. Leg one, pullback, leg two, pullback, leg three, and now we're going sideways. This is a wedge bottom bull flag to me. So here's the pull, push one, pull back, push two, pull back, push three, wedge bottom, and we, right before we touched the EMA, we rallied. This rally had two bull bars in a row and then a small pullback here. Bulls that bought this bar made 1R quickly, but you can see that once the market went to a new high, it sold off. So bulls don't really have conviction at highs. They're more inclined to buy pullbacks now. So we'll see what happens going forward into the week. If this is just a pullback to a new bull bar, or this is going to become a deeper pullback into the EMA. And the overall bigger picture here, give me 1 second. Bulls have a leg one, pullback leg two, pullback leg three, leg one, pullback leg two, pullback leg three. This is a bit of a trading range and it breaks out. I went over the three legs. So when we're in the third legs, when we're in that third leg, the probabilities change. Probabilities from the first and second leg is momentum based, and when we're in that third leg, it's mean reversion based. So the first principles are different. The first principles are the market's breaking out, and the second first principle is the market's mean reverting. Depending where we are within the market cycle, we apply whatever first principle. And if it's a fresh, here, I'll show you. So if it's a fresh breakout, let's say this is the trading range, so the market cycle is resetting. We have that fresh breakout here, leg one, pullback, leg two, pullback, leg three, and look, the market's starting to mean revert. So momentum mean reverting. Leg 1, pull back leg 2, pull back leg 3. It went from momentum to now when it sells off, it rallies. When it rallies, it sells off, and then the market cycle resets with a breakout. So that's the general idea of the market cycle. I trade around the market cycle. Leg count and trap traders is how I find my trade. So look at this trade. It's starting to turn around on me. So this is not good. Remember I said if there's a bull bar up here, that means the bulls are making money. And look, we're sideways price action. So this was just more of a sell vacuum into the low, right? Bar 1 low. I think this is the low of the overnight session. Excuse me, I think this is the open of the overnight session, which is also the low. I was betting the trading range was down here, but we could just rally and tag my stop. Depending on the bars approaching the stop loss, I might head out early, or if there's a good tail on this, I might hold and pop out for a small profit or loss. Again, I let the system teach me, so if I see a strong bull close, I may just hit out early before it hits my stop. If I see this bull bar have a tail, then that'll tell me, okay, bears are still selling at highs, and I'll be willing to hold for a couple more bars. I've done enough back testing on this to know that during the RTH session, the average time of trade is 7 bars, so I kind of count that when I'm trading ETH, but ETH does move a little bit slower, so I have some more wiggle room. I'll give it like maybe 10 bars, but I do like to be flat and ready for that next trade. Okay. Gap up, bar 1, bull bar, closing on its high, good follow through, bar 2 and 3. We have a 3-bar bull micro channel with a breakout bar 4. You can see 1-to-1 was met very quickly. Oh, 1-to-1 was met up here. Okay. Bar 4 breaks out, and now we have a gap. Gaps let us know that traders are getting trapped. So bears wanted to short the bar 3 high, thinking that it was going to be a reversal and it was a climactic gap up. However, they get trapped with bar 4. Bar 5 followed through after the breakout, 3-bar range breakout. And look at bar 5, there's a pullback. Actually, I'm going to delete the gap just so you guys can see. You guys already saw the gap. Look at bar 5, there's a pullback. So that lets us know that the bar to close rally is coming to an end soon. And then we have 6 and 7. 7, I wouldn't consider 7 climactic, but what I would consider is this entire structure climactic. So 7 by itself is a generally fair sized bull bar closing on its high. But 7 in correlation to the prior 6 bars, I think, yeah, it's climactic. It's getting climactic now. Bar 8 is a bear bar closing on its low. However, it's a first reversal, so it's a better fade, meaning it's better by the close. And look at 9, 10, and 11. You could take it back to the swing, but the swing high. Bears were not able to make 1R under bar 8, even though it closed on its low. That's good for the bulls. Look at bar 9. Bears tried to short bar 8, thinking that, well, bears also tried to short here, thinking it was climactic. I'm going to do an exercise on how I find trades. Look. So bears are betting that they can short the high at 3, maybe they short the low at 3, depending on the reversal. Let's say they bet that this is the trading range high. So I'm about to get stopped out here, guys. I usually risk just about $100. It's $10 more, and then let's say I get stopped out, which is about to happen. I'm going to go for the opposite side, like this. And I'll go for that leg 1, leg 2. If I get stopped out again, 2 trades in a row, I'll just wait maybe because that's trading range behavior. And again, that tells me I already know we're in trading range because the bulls are making money with these 2 bars. It's $10 away from hitting my stop. So I'll let it hit my stop instead, just in case on the off chance it turns around. But the chances for me getting stopped out are pretty high compared to actually, there it is. Very close to getting stopped out. It'll happen pretty soon here. If I have a chance, I like to exit this at break even. Doesn't look like it's gonna happen, but when I have a setup against a setup, it's good for me. If I get the chance, I do like to get out break even. Sometimes I'll go like this. The pullback's actually a little bit above. So there's more sellers at highs, more buyers at lows, but this bar has a lot of momentum in it. I want to leave it here, but I want to get back to the breakdown. So I'll let you guys know if I get stopped out or break even. So bears trying short here. Then look at the tail on bar 5. Bears short here, they short higher, and they almost get out for break even, and then they buy back shorts very quickly. It rallies. That's the setup I trade. Now look at bar 8 and 9. Bears trying to short the low of 9. They short the high of 12. Market sells off for a few legs lower. Could say 3 legs. Leg 1, pull back, leg 2. Okay, so 2 legs, 50% market's tag. Bears that short here, short higher. They get out at break even, and the market rallies to the target. Look what happens when it makes that third leg. So this is the third leg, and the market sells off because the probabilities for trading range behavior go up in the third leg. We can do the exercise again. So bulls that bought the high of 26, thinking that we're going to rally for the rest of the day. Look, they buy more here. Bulls that buy up here, buy more down here. Problem with this is bulls were making money. The bulls, so if I was going to catch this leg 2, leg 1, pull back leg 2, that's how I would like to see it. I don't really want to see any bars, not too many bars above the 50% line. That's kind of like, I don't know, like cautious territory, or just when I get to thinking that I got the context wrong. In this case, 26 ended up being the high. So bulls bought up here, they buy more lower, and they almost made money. They did make money here, but then they sell out, and you can catch that leg too. This creates a double top. 2 types of traps going on here. So bulls that buy here and buy more lower, get out their break-even price, and that's what creates enough selling pressure. That creates double tops. Then you do the opposite. That's what creates double bottoms. So we're talking about the market cycle. We have the leg 1, pull back leg 2, pull back leg 3, and then we go sideways. Market cycle, that was a bad line. Market cycle resets on a breakout. Look at 60, 61, 62, 63, and 64. The market's breaking out and it's making gaps. Maybe you don't want to short 64 because we are at the swing low, and I can see that. And then 65, it's just shallow bar. It's this bar. It's this 65. It's the same context for bar 8. It's a first reversal after 4 or 5 bear bars. 1, 2, 3, 4, 5 bear bars. Bulls that bought this were not able to make 1R, but bears that shorted that made 1R quickly, and then it sells off right into the higher time frame EMA. 66, 67, 68, 69, also producing gaps. Strong enough to get a second leg, and it does. Again, gaps signify that traders are getting trapped, and it lets us know when gaps happen at support and resistance. 69, 70, 71. There's a leg here. There's a bull leg. Ends up being the first pullback for this. It's the first pullback for these bear bars down, but in the overall price structure, it's the second pullback. So be cognizant of both things. And this pullback is actually deeper than the first pullback. So that bulls don't really make 1R, but they have more time to get out break even. 72, bear bar closing on its low. And then you can see that 73 tried to rally, sells off, and then small bull bar acting as a pullback. Leg 1, pullback, leg 2, sells off 75 and 76. Then we go sideways for the rest of the day. Alright guys, so I'm going to show you guys I just got stopped out. So I just got stopped out here. And now I'm just going to wait for the opposite setup. Bulls were able to make a new high. We have 5, so this bar ended up being climatic in a trading range. I'm looking for a pullback and a rally, or I'm looking for a very big bull bar, and then I'll change it to put the fibs something like this, or something like that, just to keep my order above the EMA. But you know, these happen, and that's what the good thing about trading a system is. I know if I follow the rules, eventually over time, over 100 trades, maybe by the end of the week, I will still be profitable. And it's not the easiest thing to trade a system. It took me some time to think like that, so be nice to yourself. If you follow a system, you take a loss, and then you break the system, look at it as a learning tool. It's just a moment. It's a time for you to learn, and just keep thinking like that. And over time, you'll be able to stick to the system better. You know, I still have hiccups. I think I did it last week. I'm able to follow the system, but sometimes I size up within the system. So I'm working on it. Yeah, so that's gonna be my next trade. And if this sells off, then that's an expanding triangle, and I need to stay away from the markets because expanding triangles are a breakout trader's worst nightmare. Anyways, gaps happen at support and resistance. I think I covered that. 75 sells off, follow through 76. And now we're in that third leg and we start to go more sideways. So shorting the lows is not as good as it used to be when we were up here. We're above the support. Bears failed to close the gap. However, they came close. So they broke the bar one low, which kind of sucks for the Bulls, but we went sideways on the EMA. So, all right, guys, if you made it this far, I really appreciate your time. Thank you for giving me your time. Have a good one. If you learned something, share a show. Don't be a hoe. And check out the new memberships, Second Leg Snipers. My goal is to show you guys how to trade second legs. Thank you, everyone. Have a good day.